Hey, what's up, my friend? Welcome back to the third episode of Ask Rainer. And in today's episode, I've got a question from Vinayak who asked me, hey Rainer, is there a best moving average to use in my trading? Alright, so this question is, there are many variations to this question, right? Sometimes I get question like, Rainer, is there a best indicator out there? Hey Rainer, which is the best time frame to trade? Hey Rainer, which is the best moving average number I should use? Should I use a EMA, WMA, simple moving average, and etc. Right? So in today's episode, I want to address, this question of best. Alright? So we'll talk about, how to use moving average, right? To find the best moving average for your given trading style, to use moving average to define the trend, to identify areas of value, and a question that I'm sure is on your mind. Does moving average crossover works, right? So all this and more in today's video. I'll see you there. Okay, so in today's episode of Ask Rainer, right, this is a question from Vinayak from India who asked me, for moving average and time frame, or rather, what is the best moving average for the intraday time frame, right? So this is again one of the most common questions I get. Other variations of it is something like, hey Rainer, which is the best indicator for lower time frame? Which moving average parameters should I use? Should I use the 100, the 200, the 300? Which is the best one? So the answer to this, straightforward, right, is that there is no best moving average. There is no best time frame. There is no best indicator, right? Because if you think about this, the word best, when it comes to trading, is subjective. Okay, so for example, let's say a traders like to ask, right? Like to ask me, for example, which is the best moving average? And there's really no way to answer that question, because when you talk about best, what are you referring to? Are you referring in terms of your entry? Are you referring to your exits? Are you referring to your stop loss placement? Are you referring to your trade management and blah blah blah? So you can see that the word best is actually very subjective when it comes to, trading. This is why I said that there is no best moving average out there, or there is no best indicator, to be honest. Okay? And if you think about this, right? If, like, for example, you go to a car dealer and say, hey, I want the best car down here. And the dealer, next question would be, how do you define best? Do you want the fastest car? Do you want a car with the best fuel economy? Do you want a car which has the biggest space, the most comfortable? Right, clearly you can see that, for example, maybe the Ferrari may be, one of the fastest car, and value for money could be a Toyota. So you can see that in these instances, it's the same, right? There is no best car out there. And likewise, there is no best indicator, there is no best moving average for you as a trader, right? I mean, there is no best one size fits all. That's what I'm trying to say. So clearly, right, since there is no best, right, then what's the next thing? So how do you actually use, your moving average to help with your trading, right? There are a few things that you can use it for, and I want to explain to you on how you can actually use moving average in your trading, right? Since you know that there is no best one out there, so the first and foremost, right, you need to define is, what are you using your moving average for, right? What is the purpose of it? Okay, so let's say, for example, moving average can serve to act as a filter to tell you whether to be long or short, right? Using the 200 period moving average, right? So let me explain. So let's say this chart, right? This is the chart of Euro Aussie. Alright, you can pull out the 200 MA, right? I like to use the 200 period moving average because it is a longer term moving average, right? So you just click 200, okay. Alright, and very simple, right? A very simple thing that you can do is that if the market is below the 200 period moving average, then you look to short. Alright, so the filter could be, if price is below the 200 MA, then you look for short, right? So in this case, you can see that price clearly is below the 200 MA, right? And if you ask me, this clearly looks like a downtrend to me, right? So you're basically shorting in a downtrend. So this is one purpose of, using moving average, to act as a filter to tell you whether to stay long or stay short. So if you want to stay long, the opposite is just true, right? If price is above the 200 MA, then you look to long only. So this is one way to filter out your trades and to help you trade with the trend. Okay, so that's the first one. Now, the second thing, what can moving average do for you, right? It can help you identify areas of value. right? You know that you can plot support resistance on your chart, right? These are areas of value on your chart, right? Support is a potential area with buying pressure, and resistance is a potential area for selling pressure. All right, and similarly, you can use moving average to help you define these areas of value. So let's say in this example, right, this is the Dow Jones, right? Let's say moving average this time around, you can use the 50-period moving average, especially when the trend is in a healthy trend. Right, you can see that in this instance, right, the 50-period moving average tends to act as an area of value on this market and on this time frame. On this time frame. Alright, there is nothing magical about the 50-period moving average. Trust me, right? If you look through enough time frames, you look through enough charts, right? There are times where the market will just slice and dice through the 50-period moving average. Okay, so this again boils down to what type of trend are you trying to trade? If you're trying to trade like, a healthy trend like this one you're looking right here, right, where you can see the ebb and flow of the market, the 50-period moving average would be a suitable moving average. But for example, if you want to trade, say, a longer term trend, right, like the 200 MA, so over here, right, you can see that this market is also respecting the 200 MA. So this is a longer term trend, right? You can see that the pullback is much steeper compared to the 50-period moving average. So it really boils down again to what is your goal from trading. What is your goal? What are you trying to accomplish? Right? Trading the longer term trend or just the shorter term trend? And from then on, you use the different moving average parameters to suit your needs. And one last thing, right, pretty straightforward, is that moving average can actually help you set your stop loss. So as you've seen in the earlier example, let's say for example this one is the Dow 30, right? You can see that the market has been respecting the 50-period moving average. So if you were to go long, right, if you ask me, it would make sense to actually trail your stop loss below the 50-period moving average. So for example, if the market closes below it, this would be a sign for you to exit your trailing stops. Right, this is one way to trail your stop loss. Or if you want to set an initial stop, and let's say for example you go long on this pullback over here, right, you could also set your stop loss, a buffer below this 50-period moving average, since this is the one that is being respected by this market at this point in time. So yep, right, another way is to actually use the moving average to trail or to set your stop loss. Okay, so at this point in time, you're probably wondering, right? I think a lot of you have thought about this question before, right? Does the moving average crossover work? This means that if a faster moving average crosses above the slower moving average, you go long. And if the faster moving average crosses below the slower moving average, you go short. So does this strategy work? Right? The thing is yes and no. Right? No, if you were to apply this strategy to, let's say, a particular instrument like FX, euro dollar, pound dollar, then no, this strategy is unlikely to work in the long run. Right? You can, optimize to the best moving average out there, but chances are you will not find an edge in the markets. So how do you actually make a moving average crossover strategy work? Okay, according to the works of Andreas Kleno, right, he's a systematic trend follower. You can actually use moving average crossover and develop profitable systematic trend following strategy. Right, the key is you must be able to trade across a wide variety of markets. Right, currencies, commodities, agriculture, soft agriculture, metals, bond, and etc. You need to trade across a wide variety of markets. So when certain markets are trending, this moving average crossover is able to capture the trend on these markets. Right, and of course there will be losses. Right, and you will actually incur or rather manage your loss by having proper risk management. So moving average trading strategy can work, but you need to consider other variations to it, not just the entries and exits, also the markets that you're trading, your trade management, your risk management. These are all very important thing to consider when you're trading the moving average crossover strategy. Okay, so let's do a recap of what we've learned, right? First thing first, right, I talk about is that there is no best moving average out there, right? There is no best indicator, there is no best time frame, right? Like as I've said earlier, best is relative, it is subjective. It really depends on what you're trying to achieve or accomplish in trading, right? I shared with you three things on three ways to use moving average. Number one, it can act as a filter to tell you whether to be long or short. It can help you identify areas of value to trade from, and lastly, it could also help you, set your stop loss. And the third thing is that I want you to think about is, think beyond entries, right? Don't think in terms of what is the best indicator, what is the best moving average, what is the best time frame, all right? Think a more holistic approach, right? Think, on how you want to enter the trade, how you want to exit your trade, what is your risk management, what is your trade management, what are the markets you're trading, what are the factors that can actually, affect your emotions as a trader, right? These are all very, very important aspects to think about for your trading, not just entries, right? Most traders always focus on the best indicator, the best entries, but really that is just a small subset of trading, right? I want you to think beyond entries. Okay, so with that said, right, that's the end of today's video. I hope you found it useful, and if you've enjoyed it, right, please hit the subscribe button below and the like button. And if you have any questions for me to answer in the next episode of Ask Rainer, just leave it in the comment section below. With that, I wish you good luck and good trading. Talk to you soon.